Hi, Warriors. Let's have a great week. Huge follow through from what happened last Friday. Continued weakness in the dollar. I can't find any reason to fade it unless I go to a 15-minute time frame. As you can tell, it's one of the only TFs that we're not confirming, but this momentum, we're diverging, but 20 above 20. So that's not ideal for a fade. I know a lot of people thought 94 would hold. I've been showing this line for weeks if we failed. I have some convergence here. Well, now it's all the way down towards 91.5. So that would mean 120 in the euro before it's done. Euro continuing to fly, and of course, huge follow through in the metals. Don't know what to do here, if you weren't long. I don't think I would launch. We have new historical highs here at 1940, and silver hugely outperforming. Same setup that we have in the dollar, we have in the metals. I can't fade this. We're up here around 80. It's possible I may try short-term scalps on a Tuesday. I'll let Monday follow through. What's really interesting, guys, is and ladies, that for months and months and months, we'd come in and we'd see S&P's up 40 handles and gold would be up. Now, they've all gone up together, but a little bit of the tone has changed, even though NASDAQ's up sharply here. I'm interested in what it's going to look like perhaps after the Fed. So we have the Fed to contend with this week. I don't know what they could say, but NASDAQ certainly had a negative week. We'll see what happens. A lot of people were saying that we have kind of a wedge breakdown. Let me try and draw a line with my shaky hands. Good morning, everyone. Monica, Nikita, Shahab, Ingmar. Okay. So I don't know if you guys, I know everyone watches CNBC, but one of my favorite technicians on there is Carter Worth. I know he's conventional, but I think he's insightful. And he was showing a lot of the NASDAQ stocks breaking trend. So there it is. It depends if you use this low. I'll use this. So what can happen here is we get some type of retest. Okay, we get some type of retest of this line. It's going to come in, right around 10.8. So we'll see what happens. First time it's broken this uptrend all the way up from the March low. So it's not making hay out of a weak dollar, not much. I mean, we're not that far off the highs, but we'll see what happens up there in the NASDAQ up around that 10.8 level. Also have a little confluence here. This might be a good fade for tomorrow if we get some follow through. What else is there? We're still not really, Euro pound still hasn't made a new high in a long time with all this dollar weakness. Doesn't mean that, it's a short right here, but it's kind of interesting that we're not making any more upward progress since we went to the 61.8. It's trying, but unable to get through here. So, if you want to fade the dollar in the next few days, fade something that's not making a new high, and that might be EG here with stops over the 61.8 level. This also could be a candidate for a try tomorrow. And the yen, it looks ugly, but we are 61.8 back right here from this big recovery that we had in March. I have a speed line coming in around 104, and 78.6 back is all the way down at 103. Let's see if the bonds are making any headway here. 10-year, not much. 10-year, let's see. I mean, yeah, we just, so close, but no cigar yet under 40. So one of these things has to be wrong. Okay. So either yields have to continue to drop to feed this, or what would have the market wrong-footed everywhere with everyone saying the expression lower for longer would be some type of turn in yields. And if you want to know, this is the real reason why the metals have been able to accelerate. There's no opportunity costs with rates down here. At 120, there will be. Okay, so this is, I don't know what to make out of it besides it's a market in a coma. But I can say this, with all risk off and everything that's going on, we're not making new lows in the 10-year, and we're way off the lows on the 30. So keep an eye on yields. It's really, an assumption. Lower for your longer. We'll see what happens. Maybe that'll be a play after the Fed this week. We'll see. Anything else I really, the crude I got out of, I said last week we had to close under 40.50 to have a 2-week reversal. It was a pretty good number. We got down to 64. Weren't able to do it. So, this is looking like we're going to get one more blast up here, one more high coming in crude. And that's my bias. Again, it would abort that idea back under 40.60, 40.50, back under this MA here. And I think that's about all I'm going to cover here, so that although Steve's not going to be here today, the other thing is something that, Blake has pointed out, that Canada, with all this dollar weakness, at least not yet, has not taken out this low. Okay, so it's one of the few currencies that hasn't done it yet. It's going to be a real test if oil makes a new high. Maybe all we're going to do is get some type of marginal new low in Canada. If that happens, maybe we'll have some divergences, but I'm going to wait and see what happens if we get a new high in crude where Canada is. And it's one of the standouts against making new lows with the rest of the complex. Blake stressed it last week. It's still happening. We'll see how it handles 43.5 or so in crude oil. So I have a new guest, a first-time guest on Face. Erkin's going to be with us, a Wizard of Two. I believe that's his handle. So we're going to get to talk to a real wizard today at the top of the hour. So everyone put on their tinfoil hats and get comfortable under their pyramid. And we'll be talking to Erkin from Turkey a little later on today. And with that being said, great time to bring Blake in, and his week ahead video and his comments was for follow through of dollar weakness. And he made a comment on Twitter that his goal is to be able to project a week at a time. And a week at a time, if you could get direction right for a week, that should be good enough to be successful in the business. So how you doing today, buddy? How was your weekend? Mine was quiet, flipping television channels.
Yeah. Yeah, well, that's what tends to happen in a pandemic. How you doing, Coach?
Yeah, pretty good, buddy.
Yeah,
wow,
it's what's that?
Wow.
Wow is
everything that's
right.
Yeah.
Wow is right. We have a big dollar just meltdown happening. And yeah, I mean, I've been, selling some dollar yen since Friday, and it's, you know, it's kind of imploding, and it's just kind of imploding in general. But we're reaching some pretty important resistance, and that's something that's, you know, obviously we got to be a little careful with at this point. So you know, the euro's approaching that 118 level, which is, you know, 118 is the bull flag target. You know,
Yeah,
we're at the 100.
Yeah, great call on that. Great call on that measured move.
Thank you. It's, you know, I mean, it's just been, you know, it's obviously it's happening a lot faster than you would imagine, you know, but this is a big dollar just meltdown across the board. So you have to be a little careful that we might get a snapback. I do now expect dips to be very well supported. So the question is, you know, when we start seeing some sort of intraday reversal, some sort of dip that might last a couple of days, the question is, you know, where is it going to dip to, and how far are we going to be able to go? You know, that's going to be the trick, obviously. So we'll see what happens, and there's going to be some fixing flows in about 10 minutes. Just heads up, we might get a little bit of a move here, especially with this aggressive of a move. But let's just go ahead and build the bias chart while we're here, and you know, we have to obviously know 118 is resistance. That's going to be key. And now, like I said, the trick in the euro is finding out where are we going to, if we start to dip, where are we going to find support? So here's like the 4-hour chart. Now, the natural bias here is, okay, any dip back to 115. You know, 115 was a breakout point, but that's really far from where we're at right now. So, you know, how far are we going to be able to dip today before finding support? And my assumption is going to be somewhere around here, right? Somewhere around these levels. So you got 115.90. Wow, look at the euro is just flying right now. This is the fix that's happening right now. Euro is just creaming higher. Holy cow. Okay. Which stinks because I'm long a little dollar Swiss. I was hoping that that we get a little bounce there, but we're not seeing. It's really stifled the bounce because the euro is just ripping. So any dip right now back to 116.30 is going to find support. But see, it's like today, are we even going to be able to make it back to 117?
You know, what's interesting, Blake, and I brought it up, is that we'd come in every morning with S&Ps up 30, 40 handles, and gold maybe up 8 or 10, and euro up 30, 40, where they were laggards. And now we're getting the lag in stock indices. I think that's some type of market message in there, don't you?
Yeah, I mean, it quite possibly can be. You know, we're not seeing, I think we're seeing the dollar just playing catch up to all of these big moves that we've seen, you know, and the dollar is playing catch up right now to all these big moves that we've seen in equities at this point. Okay. That's what I think is happening.
Yeah.
So, you know, hold on.
I'm just saying it's a different board I'm waking up to than I have for, it feels like Groundhog Day forever. You know, with the strongest thing on the board being stock indexes since March, you know, up until the last few weeks.
Yeah. That's very, very, very true. Very true. And so now, like, you know, it's just the dollar. You're seeing the dollar, just like I said, it's playing catch up to this equity market weakness, in my opinion. Okay, so hold on. I'm sorry. We're just I was just trying to see where we're going to get some support in the euro. So I guess if we get a dip down to 116.80, but like, are we even going to dip down there today? I guess it's hard to, at this point in time, you have to look at it and go, well, I don't know if we're even going to make our way down there at this stage in the game, right? So let's take a look at the cable. So here's the cable. The cable is well above the 200-day moving average. I want to see any dip down to 128. I think is going to be very well supported today if we can get there. 128. We are obviously bullish. And resistance now, I mean, the AB equals CD takes us to 129. Obviously, we can go past that, but 129 is going to be next resistance level. Okay. Let's go over to the Aussie. So the Aussie and the Canadian very much underperforming. So this trend line that Steve pointed out last week is still holding. Okay, it's that pink trend line. So I'll come back and reference that here in a minute. So that's going to come in at the 78% retracement, and with the euro hitting highs and the Aussie not hitting highs, that's now becoming a big risk for the Aussie. Same with the Canadian, same with the Kiwi. Resistance here is going to be 71.60 or so, right? 71.60. Now I want to put that it's bullish because I still think it is bullish, but I'm a little worried about the Aussie now. I'm gonna get really worried about the Aussie if we drop back below the 77. You can see how well we pivoted off of that level this last week. I mean, that is obviously, without any shadow of a doubt, that is really important support. So it's going to be 70, 60, and I'm going to put an asterisk here because I think that is really key for support for the bulls to maintain control in the Aussie. That gives way, and we're probably going to see some downside in the Aussie. Let's talk about the Kiwi a little bit here. The Kiwi is knocking its head up against resistance, but like I said, with the euro breaking higher, not taking the Aussie with it, not taking the Kiwi with it, not taking the Canadian with it. We'll talk about the Canadian here in a second. That is a bit of a risk for the Kiwi. So resistance right now is, my opinion is we could go a little higher than where we're at. We can go all the way up to 67.10 or 67.11. That is right now the extension of the cup and handle pattern. So I'm going to write that down just in case we surge into new highs. I want you to know that there's really big resistance up there, even if we hit new highs. That's important because if, some of you might go, oh, we're hitting new highs. We're heading out to, 67, 60. And really is, we have that cup and handle extension that comes in there. So support is going to be 66 cents. Obviously, that's a breakout point. Okay, and let's talk about, this is bullish still. Okay, now let's talk about the Canadian, because the Canadian's a little different story here. The dollar Canadian, this is a pair that, I mean, when you see the dollar getting walloped like it is, you gotta sit here and wonder, why isn't the dollar Canadian trading down towards 130? I mean, and it's not saying that the dollar Canadian can't get down to 130. It can. I mean, if the euro dollar continues to rally towards 120, the dollar Canadian is going to eventually break down. I would think. I would think. But the dollar Canadian is holding up pretty darn well. And right now, you see the 78% retracement. I'm not 100% sure that that's going to hold today. But what I am thinking is this support through here at 133.60, 133.50. I think this is going to be really important support for this currency pair today on any dip. So I'm going to write that down. And like I've been putting all the last week, I still think that it's more of a sideways trend. It's a range. It's a range, not a bearish trend at this point. I know it's been under pressure just because the dollar's been down, but overall, I don't think it's been, you know, entirely bearish, right?
No, you're right, Blake. I think its true test will be if crude makes one more run at new highs, and if Canada doesn't take out that low, you know, there's some kind of inherent relative strength in it, and that tells me at least not be short.
And that's a great point, Dale. You know, if you look at crude, which we'll take a look at in a little bit, you know, we'll take some questions here. By the way, Steve is out today, and he's out for this week. He's on vacation, so he deserves it. The guy works like 1,000 hours a week, so he's on vacation. So it's gonna be myself, Dale, Stelios. This week we're gonna bring in Andre, Paul Franco, probably Grega. Other, you know, we'll have other people in here, but this morning it'll be Stelios, myself, and Dale. So I've got a little bit of time to answer people's questions and take a look at other instruments. Like the crude oil market, I mean, is really struggling at $42. And so, Dale, just like you said, you know, just like you said, that this move in crude, it really hasn't impacted the Canadian, right?
Yeah.
I mean, that's a great observation by you, and I still think the Canadian is very much influenced by the price of crude oil, and so we're gonna go and take a look at crude here in a second. But let's go to the dollar. Well, let me go down the line here. We still have to finish up the Canadian, so let's go over the Canadian. Let's find resistance. So in case the Canadian starts bouncing. This spike high here, which is basically at 134, I mean, that should act as resistance, but if we start clearing 134, you know, you got to think that a squeeze above 134 is going to take us back to 134.45. So let's write down both of those numbers, because I think it's entirely possible that 445. I think it's entirely possible that, you know, the dollar bounces a little bit today. And if the dollar bounces a little bit, where's that going to put, you know, the dollar Canadian? It might put us right back up at the upper end of this resistance, the upper end of this range by the end of the day. So just think about that. I think that the euro is stretched up here, and I think the euro is probably going to at least start to find some sort of range. And then if that is the case, we'll probably see the dollar Canadian bounce a little bit more aggressive than other currencies. Let's take a look at the dollar mex. So the dollar Mexican peso is probing the 618 retracement here. Let's take a look at the 127% extension. The 127% extension also matches, let me reset this, and let's go over to a 4-hour. Actually, I guess I got to go over to the daily. If you look at the daily chart and you look at the breakout point, big breakout point, that comes in at 22, basically, right? Where we're at right now. You go to a 4-hour chart, okay, that's 22.06, and look at the 127% extension of this last move comes in at the same level. It's 22.06. So I think if the dollar Canadian or dollar Mexican peso continues to slide, 22.06 is going to be support. Now, resistance is this is the breakdown point for the dollar max right here. But if we get back above 22, what is that, 22.28? I think it's 22.27 actually, but we get back above that and we're probably going to squeeze. Now, I'm going to keep it on range for the dollar Mexican peso because, look, in all actuality, just like the dollar Canadian, it's not selling off. So, you know, the risk is starting to build for a squeeze in, the dollar Canadian, dollar Mexican peso. Yeah, I know it's coming down a little bit right now, but in all actuality, it's holding up pretty well. Now let's go over to that is range. Let's go over to the Swissy. I bought a little Swissy today, about 10 pips ago, 12 pips ago, this morning. Let's go over to the daily chart in the Swissy. Now, if you see this horizontal support, 2018 lows right here, 2020, March 2020, and then what we did today is we actually went below that level, and we're creating a hammer right now. Now it's very early in the session, so things can change. But the fact of the matter is we slumped below, basically 92 cents and took out all the stops below. And now we're bouncing. And we're near our highs of the session with the euro dollar near its highs of the session. Obviously, the euro Swiss that makes the euro Swiss very bullish. But what that also makes is the dollar Swiss at risk of a little bit of a squeeze. So I'm looking right now at resistance at, you can see I have a alarm set at 92.40, because if it squeezes past 92.40, then I might be adding here. So 92.40, we are bearish, but keep in mind that this support 91.80 is now pretty key. Okay, or whatever the lows were, 91.68, 91.70. So let's just write 91.70. 91.70. This is going to be pretty important because we might be creating a false breakdown in the Swissy. Like I said, we start getting back above 92.40, and next thing you know, we got a short squeeze going. Okay, just something to pay attention to. Dollar yen. Dollar yen was a bearish break below 108. 106, I'm sorry. I said 108. 106, big support, broke. Okay. The 161% extension of this move is at 104.78. That is going to be support for today. 104.78. Okay. Now, any move back to 106 should find sellers. That's a bearish trend. Okay. If you look at the dollar yen, this is in really, if you look at the more of like a daily structure of the dollar yen, it looks something more like that, right? It's a bearish wedge breakdown. Went through a big consolidation phase, finally broke down. And frankly, it looks like the dollar yen's going back down to 104.50, maybe even down to 103 in time, right? And if you use ForexAnalytix, you knew that we started getting really bearish actually on Friday on the break below these levels of support. So here's your active pattern in play from Friday. All right. So the dollar yen bearish. Let's go over to dollar index. Okay, let's take a look. Let's take a look.
I'd also like to stress that was pushed after face, and just another reason, I know it's only one trade, for you to have a membership with us so that you are alerted to things after face.
Oh yeah,
okay.
the face webinar. I mean, I go through this analysis, but a lot of people have they have trouble with the actual execution part, like, because they need too much confirmation, or they,
look, we're just looking perfect.
It's got to be perfect.
Keep it simple.
Yeah,
it broke support. You get the alert. It's on your phone. You're out there, wearing your mask outside, and you get the alert, and you do the trade.
Right.
If you agree with it, but you're not going to get all of our stuff here in face. And you know what? Think about it. How many of you guys out here trade standard size contracts? You guys, or you're not all micros, are you? So what you're talking about is giving up 10 pips, which you risk every time you click.
Dale,
Yeah.
I'm sorry. I think we have data coming out.
Oh, okay.
Hold on.
Yeah,
really,
we do. Durable goods orders, month on month, slightly
I am a hedge fund,
worse.
Gregorios.
Core durable goods slightly worse, durable goods slightly better, basically nothing. So
yeah, they're right here.
Pay too much attention to it. Yeah.
Okay, sorry, Dale. I didn't. Okay, you can continue.
That's all right.
On.
Anyway, Gregorios says I should be a hedge fund. In fact, I'm hedged on everything, Gregorios, including spirituality. Bar misfit at 13, baptized at 40. So I have my own hedge fund. Go ahead. Anyway,
Right.
you know, I'm just stressing that you're not going to catch all of our most of our good stuff happens in members chat and push alerts from the team working 24/6 pretty much. So that's it. I'm through with
especially
yelling at everybody to join.
Well, you know, like Grega's alerts and his and same with Andre, those patterns in play, a lot of them trigger in European trade, and you know, when I'm asleep, or you know, and so you know, they happen around the clock. It's not just you know, not just a North American phenomenon type of thing. So yeah, anyway, thanks for bringing all that up, Dale. Let's talk about the dollar index, because the dollar index is at, you can see this is pretty important support that we're at today. I mean, you can see this is the dollar index from 2011, basically a trend line coming into play. We got some horizontal support. We have the flag completion right now. So, you know, I expect the dollar to find some footing. Now, does that mean that the dollar is going to, this is it, like the dollar is going to bounce from here? No, realistically, this might be a day of consolidation before the dollar continues lower. So if you guys are thinking at this point that oh, this is going to be it, this is where the dollar bounces, and you know, we you know, the euro comes back to 1.12, I don't think that that's the case. Okay. I don't really think that that's the case. So
my stimulus check, Blake, that I don't get is worth less in U.S. dollar terms. I'm requesting that if I get one, that it's in euro.
You're going to request that you get paid in euros? All right. So I'm going to write down that the low of today, which is 93.61, that's going to be support, because this is, actually, you know what? I'll take that back. I'm going to write down 93.50. I think 93.50 is support. That's that long-term trend line. I want to put an asterisk there. And yes, we're bearish, but you have to be really careful because we are, you know, near some really key support. Now, any bounce in the dollar index, you know, looks like 94.10 will offer some resistance. Okay. The US dollar Norwegian krona. Now, this is a currency pair that I think is at probably some very important support. Okay. You can see this trend line coming into play in the US dollar Norwegian krona. This is a long-term weekly channel support. Let me move that channel support a little bit. Okay. You can see intraday, we're testing all of this support here. Relative strength is very divergent. So 903, 904 is going to be support, but man, I don't know. I wouldn't want to be short down here, especially with the Oz and the Kiwi underperforming, you know, and the Canadian too. Yeah, you got to be a little careful. But it is bearish, and I think while we're below, you know, 924, looks like 924. Yeah, it's, you know, it's bearish. All right, let's talk about gold at all-time highs. Now, I don't think there should be anybody here, Dale, that is listening in that it should be bearish gold or silver, right?
Not over the last well, I don't think that you've been bearish.
Well, if you listen to
gold.
Stelios, you're
Yeah.
never bearish precious metals.
Yeah.
But remember our conversation for the last few weeks. You don't want to be short precious metals. I mean, if you look at this is a possible repeat of what happened post financial crisis. We have a very similar situation where balance sheets are being expanded by central banks globally. And if you look back, at this move that happened 2009, 2010, my argument is, why can't this happen again? And you might say, well, it's happening now. But look, balance sheets have just started to increase since, like, big time since here.
Last fall, really, when we had the issues in the repo
Yeah, and
market.
if you want to just say during the pandemic, from basically this year, you're talking about a possible move like this over the course of the next couple of years, and I don't think that's uncalled for. I don't think a move to 2,500 in gold is going to be uncalled for based on what central banks are doing. So, with that being said, you guys shouldn't be short, gold or silver or, any of these precious metals, and this has been the argument for weeks, although I've been, long physical gold for a long time. And I've just been hoping for any type of dip to get a buy-in. But now, you gotta just hope and pray that we get some sort of dip, maybe back towards 1860, but then you'd have a possible double top. So I don't know if that's going to necessarily be the case. I think the risk still is for gold to continue higher. The question is, how much higher can we go? Because now for today, you have to imagine that 1920 is going to offer support, because this is a very bullish breakout, right? 1920. That's the previous all-time highs, 1923 actually. But we might get a dip down to, I'm trying to be pretty granular here, and I mean, maybe you get a dip down to 1900. So this would be 1923. Okay. And now, I mean, I guess resistance is at maybe 1945, maybe. But do you really want to stand in the way? I wouldn't.
I tried it.
You tried, yeah. I mean, it's like you get run over by a freight train.
Yeah,
S&P.
I did.
And then it's bound to happen. I mean, you like gold this is now a one-way train. It has been for the last few weeks. You just guys got to, I tell people in our chat room all the time, look, you get on the train or you get out of the way. That's it. You don't stand in front of it, not these moves.
Once it got over 1820, Blake, it became a throwover. And one of the biggest throwovers I could remember in my career. I mean, extending above the wedge, you had to. So,
I'm listening to you.
Yeah. Well, you had that wedge, and right around there at 1820, and once it accelerated through,
right,
it became a runaway market.
Yeah. Once it goes over, yeah. All right, so
maybe that's a natural place.
The S&P, we've got to, while we're above this 3,200 or 3,195, we got to imagine we're bullish. Look at the dollar Canadian, man. What a bounce. We got to imagine that it's still bullish, but I'm a little worried with the S&Ps here that we're not able to capitalize on this rally. So 3290, I think, is going to be resistance. I think it's still bullish, but be careful, because if we break through this support, 3195, it's going to change us from being bullish to more of a range. Okay. Then we're going to be like more bouncing around. Then we're going to have to start to be careful with, some of this like
looks like it could put in a right shoulder here, Blake, and break under that level you're talking about.
Maybe like, head, shoulder. It's possible. Yeah, it's really early, but it's definitely possible. Yeah. So anyway, that's kind of what I see right now. This is your bias chart. You guys want to take a picture of this? Whoops, hold on. There we go. And let's talk to Stelios for a minute and see what he's thinking. What's up, Stel?
Peel him off the ceiling.
Good morning.
Good morning, Stelios.
That guy Steve, such a slacker. He's on holidays again. I can't believe
that guy's on vacation. I'm just happy for you guys that you guys get to go on vacation.
We
As
are
an American, I'm stuck.
I'm envious.
Yeah, I mean, I'm stuck.
Not happy for them. I'm jealous.
Yeah.
So, well, that's the difference between you and me, Dale.
I
want great things for everybody.
You are really
me.
I'm completely self-absorbed individual.
You are completely self-absorbed. No, I mean, look, I'm definitely jealous. I wish I was at a resort, sitting on the beach right now.
Yeah.
Instead, I can't complain though. I mean, I try to explain to my kids and my wife, like, I'm happy being bored through this pandemic. I'd rather be here and bored than, in a hospital. Yeah. Or sick. It's like you can't really complain about your not being healthy at this stage in the game. However, I am jealous that I wish I was up.
Okay, there you go.
Yeah.
Now you're being an American. All right.
Yes. So Stelios, what's happening What's happening today?
Well, two main things. I mean, you talked about a lot of stuff, but two main things for me. One, metals. The second one is the dollar. And metals, there's not much more to say from what you did. New all-time highs in gold. I still think, obviously, in the long term, we're going a lot higher, but there has to be a correction at some point. And I was looking at the DXY index. There was a pretty good support at around 94, 94.10, something like that. I was talking about that for a while. It was the ascending trend line on a weekly chart from 2014 lows, and it just went through it. So that was, I was scratching my head a little bit. I thought it was going to hold there. And it's gone under, and also gold making new all-time highs. Could this be a little bit of a false breakout / breakdown in the DXY? It could be. Can we see a little bounce in the dollar? I think it's long overdue. Sentiment positioning pretty bearish, and we should see it. The question is when, and do you get ahead of this steam engine? I wouldn't, but I do think that it will come. But like you said, same with the euro dollar. Any dips, I think, should be bought. So FOMC this week, correctly, as our friend David said, that might give us a little bit of a, if Powell is not dovish, if he shows any signs of kind of neutralness or even hawkishness, obviously, I think we're going to see the dollar recover a little bit.
Are they having a press conference at this meeting?
For the Fed?
Yeah.
For the FOMC, I believe this is a Fed meeting with the press conference.
Yes.
Yeah.
Okay.
Yes, there is an hour later.
Thank you, guys.
Yes.
Yeah. So, Stelios, you were talking about this trend line in the dollar index. So the dollar index trend line that you were talking about is in red. And if you take the lows from 2014, this is what Stelios is pointing out. We're through it. Here's my argument to that. If you go to the lows back here in 2011, and this is what when I try to draw trend lines, I try to go through multiple points of contact. So 1, 2. You can see all the support that you're referencing the spike low in 2014. I'm going through some of the other lows, then through the spike low here. That actually takes us to where we're at right now. And then on top of that, remember we follow this pattern, this bear flag pattern has now completed in the dollar index. And so I would argue that we have to be very, very careful with dollar sales here. You know what I'm saying?
Yeah. And it's funny how timing works, right? We've completed this bear flag. We've come to the ascending trend line, the one you correctly noted, and it's FOMC week. So, it's all coming together. If we see something on the FOMC, which is not really dovish, then I think we might bounce.
Yeah, and people are expecting a little bit more dovish Fed, and you're right. I mean, this could be this.
How could they be any more dovish than they already are?
Well, I mean, they can be. I mean, because they can start controlling.
You can always do more of everything.
Yeah. How about some nice little yield control, right?
Yeah.
Yield curve control, which has been a big talking point. But let's say that's really not a topic of conversation right now. The dollar could actually bounce, and that's what Stelios is pointing out, is that we have the potential of the dollar creating some sort of low this week. I don't think right now is the time where you're like, okay, the dollar's this is it for the dollar. I'm gonna get long the dollar, and unless it's like a counter trend, just want to stick around for a little bit. Like, look, I bought the dollar Swiss today. I realistically should probably take off my 5 pips right now and just get out of it. But I'm just kind of scalping around at this point. This is not I'm buying the dollar Swiss and I'm going to hang on to it for the next, I'm going to hang on to it for the next 2 weeks. But this week is a week where a significant low could be formed if a lot of things come into play, right, Stelios?
Absolutely. And we have to put things in perspective. And my view is, yes, we could get a bounce in the dollar, but with that bounce, I will be looking for points to get short. Not necessarily dollar pairs, but maybe get long silver again. I put a take profit level in silver. The $26 is a huge level. Everybody's looking at it. That's why I put mine at 25.15 or something like that. I can't remember exactly how many cents it was, but it's not there yet. But I think it's going to get hit. And once the dollar does bounce, I'm going to be looking to buy more as metals go lower, which I think they will at some point a little bit. So that's my focus. I'm not losing focus. I think the dollar is going to bounce, but it's going to be a selling opportunity, in my opinion.
Okay. All right. Well, that I would agree with you. And so, like for me, I'm really hoping the dollar bounces to a point where the euro gets back down towards like maybe like the high 115s. Maybe like maybe even the mid 115s, and then we can try to play it back on the long side, because I do believe that this 115 level is major. So any type of dip from here, I want to be long. And but now it's just hoping that we get that kind of, we get that move. That's what I'm hoping for.
Yeah.
Hold on. Go ahead.
I was going to say there are other things looming which can affect and probably will affect the dollar. We have the new stimulus plan, which is expected to be unveiled today. It's going to be around 1 trillion, and that's the low end. This is what the Republicans want. The Democrats wanted something like 3.5 trillion. Funny how we talk about trillion, 1, 2, 3, 4, or whatever, like it's nothing. But it's going to be on the low side. Probably more direct checks. That goes for you, Dale. You don't get that. Checks and stimulus in various forms. So that's another thing that could move the dollar.
Dale's like, euros, please. Euros, please. Yeah. Please pay me in euros.
When was it? This reminds me, I think after the crisis in 2008, when the dollar had a big fall, I remember there was some American rapper on his videos. Instead of showing dollar bills, he had euros. You remember that? That was so much fun.
I don't remember that, but that's the whole Giselle thing.
Yeah. Oh, yeah. True. That too. But I was laughing at that actually. But what else? So we have that out of the US. We also have more developments in terms of the COVID situation. We have more travel bans, and cases are rising in China. India, I'm reading. I mean, obviously, I'm not there, but I'm reading they have huge rate of increase, something like over 1 million cases last week, which is scary. And unfortunately, it doesn't look like this is over. Will there be more shutdowns, lockdowns of the economy? I don't think so, but it might be voluntary by the people, like we've said before, because if things get difficult, you know, you're not going to be out there doing stuff, are you? So, you know, that's another front which has kind of been put in the background. We had the news from Moderna, who are saying they're going to be moving into phase 3 of their testing. So, you know, there are steps being taken, and hopefully we're going to have something for next year. But this year, I think we can forget about it, and with whatever implications that has to, you know, the economies and general health situation. So, you know, there's still a few things going on that could move things, but really the FOMC is the main event. Speaking about data, we also had some IFO data out of Germany. The usual thing: current assessment worse than expected, expectations better than expected. So really things are not good, but it's going to get all better, and I hope that's right. And that's really it. I mean, otherwise equities continue their little road of you know, no worries at all. Obviously they have a day or two of down moves. We had that last week, but really the S&P over 3200 is still you know, it's still looking pretty good. I still think we're going to see a proper leg lower at some point. Where is it going to be? I don't know. I know I'm not a magician, but I think we will see a leg lower, and that might coincide with a spike in the dollar. I will be looking to get long equities at levels quite a bit below here. So that's my strategy.
So hold on really quick. You should. We got a couple comments about the big dam in China, about its maybe in danger of breaking. I don't know if that's going to have any. Hold on really quick. Sorry, I'm talking to the guys in my office really quick. Sorry, I just was letting these guys know in Connecticut that I'll be a little late because they don't know that Steve's on vacation. They, you know, what happens at my office and what happens with ForexAnalytix are two totally different things. I mean, the guys in my office in Connecticut know that I do ForexAnalytix stuff all day, but they don't. You know, it's more of like I just kind of tell them, hey, I'm dealing with this right now, and they know that I trade. And
Steve is creating more problems, right?
Steve is creating some waves right now. So, and obviously we're seeing some moves. And I was just going to look at the euro, and I wanted to talk about the dam, which is a very it could actually move. Maybe equity markets. I don't know if it's really going to be much of a influence for the dollar. Like for when I look at the dollar may get a bounce. And I think, let me explain this actually as a just generalization. The dollar is a safe haven currency, but we have to see a big financial shock to move the dollar up aggressively in a period of risk aversion. Like what we saw when the whole world went on lockdown, the dollar went straight up for a couple weeks, and then it obviously has eased off. Unless the dam, the Three Gorges Dam in China breaks and it floods all of China through Indonesia and spills out into Australia, which I'm obviously being very sarcastic right now. It's probably not going to move the dollar much. We might get a little bit of risk aversion. The dollar might bounce a little bit, but not.
Would it be more significant than if Hoover Dam went? Is it the magnitude of this?
Brock says the drug manufacturers downstream of dam, but I mean, is it going to be a point where it really knocks them out? But I don't know because I haven't done enough research, and maybe it is. Maybe that is a big risk. I don't know. Do you know, Coach?
I don't.
Okay,
I was wondering if it was as big as the implications if anything ever happened to Hoover Dam. That, Arizona would be in trouble.
Right. So anyway, yeah,
That's all you
I
need
guess.
now, right?
But will it move the currency markets? That I don't know. But also a couple other the other comments that
There,
was
see, our attendees know it's 5 times bigger than Hoover from DJ.
yeah. I mean, I know it's like the biggest dam in the world, right? So
Damn.
what's that?
It's a damn big dam, isn't it?
It's a
Yeah,
damn
damn it.
big dam. Damn.
Yeah.
I mean, Scott said it would be a 360-foot wall of water. I mean, that sounds pretty massive. All I have to say is I'm kind of glad I'm in the desert right now. As a result,
Get my surfboard out.
yeah. So hey, let's. We got just a few minutes before Dale does his interview, and we're obviously not going to get to a lot of questions, but I want to. And remember, when you're. Oh, this is what I wanted to say. When you're using ForexAnalytix, you have. I can only do so much analysis throughout the course of the session. And by the way, a lot of these resistance levels will be updated here in the next couple hours, and support levels for all of these assets. One of the things that's moving is Bitcoin and Ethereum. Now, if you want to see what, look at our lights. I was going to actually make point of this on Friday. You don't see this that often, that we have all green indicators on both Bitcoin and Ethereum. That was as of last Thursday, I think it was, because when I made the last adjustment for Ethereum to turn bullish on Thursday, it was because we finally broke this. Let me show you on Thursday. Oh no, it was I'm sorry, it was Bitcoin. It was like last week when we finally broke through here. I'm like, okay, that can finally turn green. And Ethereum was already green because it went green when we busted through this this flag or triangle. But look at the massive squeeze in Bitcoin, Ethereum. Bitcoin's approaching really key support here, but we have, or resistance, I'm sorry. But I was going to make note of it actually on Thursday of last week. This is the first time that I've seen us have all green indicators on cryptocurrencies in a long time. So that was and obviously we're now approaching some pretty key resistance
and Blake, remember we started to talk about cryptos a few weeks back, not a long time ago, but a few weeks back, and on Face, in the chat room, on the weekly newsletter, it's like something that was brewing, and just like with pretty much every other asset that's linked to dollar, which is basically dollar denominated, is going to catch up at some point to supply. Money supply. So, I personally don't really believe in cryptos that much, but if you had to ask me, a month ago when we started talking about it, I said, if you put a gun to my head, I'd definitely buy this. So,
look, people are going to be looking for assets to hide from inflation. I think we're going to be dealing with a period of probably stagflation, where we're going to have inflation and just very little of zero growth, which is a stagflationary type of environment. But that's also going to attract people to assets like gold, Bitcoin, crude, just assets that are like that. But real quick before Dale takes over, the reason why I wanted to mention this is if I didn't get to the analysis of something that you wanted to see. So remember the basic technical analysis, it's updated by myself and the rest of the team throughout the course of the week. And you'll get either the end of day analysis or intraday analysis of these basic technical analysis is going to come from me throughout the course of the day. Also want to talk about really quick, we were talking about crude and where crude's at. Crude, I think, is at a really big important resistance. Let me get to it here at 42. And this is one of those, we talked a lot about it regarding the Canadian. This is all the breakdown point, the lows from 2017, the lows from 2018. we keep knocking our head up against 42, and it's also the 200-day moving average on the continuous contract. So if crude continues to be weighed down here and not break above 42, that's going to be eventually bullish for the dollar Canadian. So think about that, guys, you know, when you're trading around. You know, if crude can't break and it starts to break through like 40 bucks, that's just going to be a nice little boost to the dollar Canadian, in my opinion. So Stelios, I'm going to pass it over to Dale from here. Anything else that you wanted to mention?
No, I think we covered a lot of stuff, and looking forward to the interview. So thank you, Blake, for doing all that today.
Oh, hey, you know, hey, and by the way, tomorrow we're going to have
Andre, and Wednesday's Grega.
Wednesday is going to be Grega. Thursday will probably be Paul Franco that does the European crossover. So you guys will have other team members on throughout the course of the week. So thank you guys for tuning in, and Dale, have a great interview today.
Thank you, Blake.
Thank you, Blake.
All right, thanks, guys.
Okay, Erkin, I see you. I'm going to get you set up here. There you are. Hello, Erkin. Welcome to FACE. Very nice to meet you. Asking you to unmute.
Unmute, yes. Hello?
I think I hear you. There you are. Nice to meet you, Erkin.
Nice to meet you, Dale. How are you?
Good. Have you ever used Zoom before?
Yes, of course. Yeah, I used it.
Okay, who hasn't, right, nowadays? So to share your screen, there's a green box in the drop down menu.
I know.
Okay, buddy.
No problem.
I've used it 1,000 times, and I need to be reminded. So I'm very low tech.
Yeah, I'm kind of.
Okay.
Will you ask the questions, or will still...
Yeah, I'm going to ask the questions. I'm waiting
okay.
for you to share your screen. Do you want to do that, or you want me to share mine?
Sure. No problem. Yes, here we go.
So the first question is, how did you get involved in this industry? Tell us a little bit about your journey and how you got to where you are now.
I'm an economics journalist, actually. I started doing the business in 2003 in Turkey, in Istanbul. Later, I started working for Dow Jones Newswires and the Wall Street Journal Group. I was producing stories for them in English from Turkey. And later, I was transferred to Al Jazeera network.
Okay.
In that television, I found opportunity to make a deep research on 2008 crisis. And so when I made this deep research, I found that some unbelievable information. I found that the international monetary system is about to change, and the dollar system is about to change, and it will be replaced with something new and most probably related, or maybe depending on something like gold or the similar monetary assets like silver or even Bitcoin. And I wrote a book in 2013, which has got a title. Maybe I can show the title.
Yeah, sure. Go ahead and show it.
Well, on the screen. Let me find it first.
So you really came from a journalistic background.
Yes.
Yeah. So you had talked as a journalist. You were probably out there. Intelligence gathering, which I'm a big believer in, talking to experts, to other experts, to learn and put together your thesis. Were there any people that you credit giving you insights into what you published and what your thoughts are?
A lot of, first of all, Ben Bernanke and Alan Greenspan. their statements and their policies,
Yes.
and many other people like Nouriel Roubini. How can I say? Maybe other investors like Warren Buffett, Mark Yusko, many other people. And when I brought all these data and speeches, I found that the system on the brink of a very big change.
Is that what gold is currently signaling, and silver, and more recently dollar weakness?
Definitely. I predicted that in my 2013 book, and the book, if I can share the screen.
Okay, so what you do is you hit new share.
Okay, I fixed it, I guess.
Okay.
Now it will be opened in.
So, Erkin, in our business, the if is not as difficult as the when. The art of this business is the when, right? Because people have been saying this, oh, come on. I mean, back to when I was new in the business, but you could go all the way back to the 70s and find things about the death of the dollar after we came off the gold standard. So you have an idea of when's? Oh, there's some nice charts. Okay, go ahead.
Yeah, you are definitely right. And why this is not working? Yeah. Now, can you see the?
You have a blank screen. You have nothing up right now. Prior, you had some charts. Jamie Dimon was on it. I think it would have to do with probably
sharing again. Okay.
Yeah, share again.
Yes. Now you
there's
can see
your book. Yeah.
Yes, this is my book. Its title is 2020 Big Crisis, Wonderful Opportunity, New Economy. So for timing.
Oh, nice. And that was published when, in 2013?
Yes, definitely. October 2013.
What led you to believe 2020 was the year? Certain cycles or just your...
I calculated cycles, previous recession cycles, and over it I put Ben Bernanke's famous speech. It must be in 2002 or something. Make sure deflation doesn't happen here. Speech, and that speech was giving you the stages. What will the Fed do in the future when something like 2008 happens?
Right.
And by bringing those two together, previous recession cycles and the roadmap of Ben Bernanke, and when I wrote the book in 2013, all the stages were already almost completed. One stage was missing, big tax cuts. And that is done by Trump after he was elected.
Okay.
And the scenario definitely completely realized, and my prediction was a hit. And I guess I have the world record on this, because later many people, including Ben Bernanke himself, predicted there will be something big in 2020, but they started issuing their predictions after 2018.
Yeah, you were early.
Yeah.
Is COVID an outlier to this whole thing, or is it possible that you saw something like this coming as well?
In the book, I said that something natural could trigger the issue as well, and that's where COVID comes into play. And the real causes told by this graph. It's total credit market debt, as a percentage of US GDP.
Yeah.
We had a bigger pandemic, more lethal, which killed 50 million people around the world in 1918
18. Yeah.
and 1920.
Yeah.
And when you look at this chart, there's no credit bubble at that time. So there was no financial crisis at that time. We don't remember a big financial event in between 1918 and 1920. We have a mild recession, but we don't have a crisis. What we see here in 1929, there is a credit bubble. And after 1980 period, in which the US broke the ties between gold and US dollar, you see the credit bubble skyrocketed. And that's the problem. That's the weakness of the economy. So any natural cause like COVID would pull the trigger. It was obvious.
Okay. All right. So looking at this chart, I noticed that we had a crash even though credit was still expanding. And right here, what year do you call the real money Dow peak? That was probably based upon not adjusting for nominal gains with the dollar weakness. Is that correct?
When you calculate the nominal gains and real gains, you still have big gains in gold and silver.
Okay. Well, I'm talking about your real money Dow peak. What year was that? 2000?
I don't know.
Well, it's on your chart.
You mean here in the graph?
I mean where you have printed real money Dow peak with an arrow. That's before, and then it continued. The credit expansion continued. What do you mean by real money Dow peak? That was subtracting. Okay,
you are
that's
saying
what I meant.
this point, real money Dow peak. I don't know. I didn't make the graph actually. I don't know what they mean. I don't know what they mean.
All right. Well, all right. Anyway,
I never noticed that point on this graph.
Anyway, that's okay. So we'll have to put out a tweet and say on your interview.
Maybe they are referring to Dow Gold ratio.
Oh,
and,
could be.
They may be predicting. They may be indicating the 2000 stock market Nasdaq bubble.
Okay.
Yeah.
All right. It looks like it's around 2000 where, even though we've had bull markets after the dot-com crash, there are a lot of people that believe we started a secular bear market in 2000, even though the market doubled in value over that high. So,
of course.
All right. So here we are, a few months away from an election.
Mm-hmm.
Does this play into your narrative at all?
Sure, election is also an uncertainty. I guess despite the polls, Trump has got a significant chance to be elected again, but it's still uncertainty, and there are three big reasons pushing gold and silver and also Bitcoin up nowadays. First of all, uncertainties, because we don't know what will happen about this COVID-19 health issue. Will it recover all over the world, or will we face another second wave in the fall?
What do you think?
I guess it's probably will get worse in fall.
Okay.
And because especially in the United States, they are not administrating the problem properly. Even in Turkey, there are some problems here as well, but we never had a discussion like, should we wear masks or not? it's a very important problem.
Let me ask you this about Turkey, because it was one before the dollar started turning down quite forcefully here. The lira, the Turkish lira, has been in a bear market. To me, it seems like forever. And Erdogan didn't want to use interest rates to support it. And what's your view, and how did the Turkish people handle currency depreciation? Because most populations, I don't care what country you're in, really aren't that sophisticated to know how to protect themselves in a currency crisis. How did your countrymen handle it? And what's your outlook for the lira now that the dollar is finally weakening? Could the lira rebound?
I don't think so, first of all, because the central bank doesn't have any proper US dollar reserves at the moment to facilitate a rebound in Turkish lira, and we have got a lot of debt payments to do. And
well, you know, what you just mentioned is the dollar bulls argument for not a dollar crash right away, but a huge dollar rally that could occur first before we move into this new system, which creates a deflationary bust. So I could understand how gold could go up if we're going to have a deflationary period. Or are you of the mindset that we're headed towards not just inflation, but extreme inflation? What is, would you look at credit expansion? When the credit bubble pops, isn't that deflationary?
Sure, I guess first we will have a deflationary environment again, like we had very shortly in March or in 08. First, we will have another deflationary wave, and then the central banks will start another round of money printing, and which will bring us to extreme inflationary conditions. But in Turkey, this doesn't matter because Turkey's metrics data is very different, position is very different. And Turkish people are used to high inflation. From 70s to 90s, something like 20 years, Turkey was subject to inflation rates, annual inflation rates of 50%, 100%, and so on.
Well, how do people get by if their income doesn't increase by that much? What happens?
Everybody was adjusting themselves.
How do you adjust to losing purchasing power like that? You don't eat?
Not
you
like
don't
that.
Go to the doctor? You ask your landlord to, how do you do it?
Everybody was increasing the prices, and of course they were increasing the wages as well. It was not like Venezuela.
So wages went up with the inflation.
Of course, they were losing their purchasing power, and the environment was terrible. But they learned the way how can they survive in this environment as well. And by the way, gold is a very how can I say, traditional investment in Turkey. Every household has got gold in Turkey. When you make a wedding, everybody, all your friends and relatives bring gold to you. These are traditions, and gold money is invented in Western Anatolia, in Lydia kingdom, 600 BC. So there's a very strong market for gold in Turkey, and very strong tradition for investing in gold. And I guess in this last gold rally, which started in 2018, Turkish people made nearly $100 billion in terms of revenue from gold, because in Turkey, according to the prediction of World Gold Council, some 5,000 tons of gold is held by households. It's not in the financial system. So it's a way to protect yourself against inflation.
So they had the history for doing so, not as much as perhaps the U.S., although I've heard stories how gold coins saved people during the 1930 depression here, that people that had a few coins buried in a coffee can helped them survive that depression. So someone's asking me this in our attendees: why has the Turkish lira not moved in price for the last month?
Because Erdogan administration actually closed the doors for
there's capital controls now?
Not officially, but they closed all the swap lines, so it's an unofficial capital control and fixed rate regime now, which makes me happy as an investor, because I don't need to worry about the US dollar at the moment. But I know when what happened last time they did it officially in 2000. Turkey implemented an official peg for US dollar, and it caused the worst financial crisis in Turkish history. I hope it doesn't happen again, but history tells a different story.
Okay, so let's talk history. If you're talking about global depression, I know some people, and I want to know what you think, is 2008. Okay, so the everything bubble. Okay, that's a nice chart. Why don't you keep it there?
Okay, I can keep
it. Depression, if it could be triggered, I know some people that are thinking that ground zero, unlike 2008, which was derivative paper on real estate here in the US being the trigger for the global Great Recession, that this time it's going to come out of Europe. A lot of people looking towards possibly Italy opting out of the euro. What's your view on what's going to happen to Europe? Is there still a threat? All the people who are looking for the euro to trade under parity, is that now off the table or still on the table?
Still on the table, of course. If a second wave hits about this COVID-19, which is the base scenario for IMF. In their last report, they said that our base case scenario is a second wave will hit in early 2021. So if another wave of COVID-19 hits, Italy and Spain would be in very difficult condition. So,
well, weren't the Italian banks almost zombie banks anyway before COVID?
Yeah, of course.
Okay, so everyone's. Go ahead.
This euro thing is not only a financial and economic issue. It, despite all these difficulties, they could remain in euro, and European Central Bank could try to take more measures to save them. But of course, they will be in whole Europe will be in very difficult conditions if the second wave hits.
Worse than the U.S.?
They are worse than U.S. in every condition because they don't have a proper administration for whole Europe. Everybody is saying something different. They don't have a policy.
Because it's not a federal union.
Yes, and their banks are in very bad shape, and their population is very old. They don't have innovation.
Okay, demographic argument too.
Yes, yes.
How about China, Erkin? What's your view with all of this happening? Is this China? You know, a lot of people have been talking about the ascension of China, the yuan being part of maybe a new
It's
SDR or whatever. What do you think? They have plenty of debt too. It's harder to know. They're pretty opaque. But do you have a view on
sure.
China during this scenario?
China looks very similar to the United States before 1929 at the moment. They
Wow.
have a huge credit bubble, excess producing capacity, but the markets they need to export are closing. So they are on the brink of a deflation event similar to the 1929 big crisis, Great Depression. Maybe they could soften this with central planning. I mean, maybe they could achieve a policy which would not cause people starving. But they are not in good shape as well.
Okay.
Of course, there is something big happening in China. They are increasing their production capacity, and they will catch and most probably pass the United States as the world's largest economy in the coming years. But it doesn't mean that they have no problem. Everything is okay for them.
Yeah, maybe they come out of the reset better than
maybe. And we don't know what politic results will emerge from that kind of depression in China, because traditionally Chinese administrations always fear of an uprising from,
Yes.
especially the lower classes.
Yeah.
That's why they are actually like something like fetishist about this growing economy. Because if they not grow the economy, they know that people will revolt, and they have a lot of problems as well.
Okay. You know, I like to ask people who have not exactly the same type of bearish view that you have. A lot of bears have different reasons for looking for negative outcomes. I like to ask people that feel this way and see what type of, problems and crises that are coming down the road, where they're going to ride it out. Are you going to ride it out in Turkey?
Sure, I have my plan since 2013 when I wrote the first book. I decided to play on limited supply monetary assets, because the central banks will flood the world with unlimited currency. So I decided to invest on gold, silver, Bitcoin, and some altcoins.
Okay.
And it's going very well up to now.
Oh, okay, well, that's the financial side.
Mm-hmm.
Now, what you describe, and we're already seeing it happen here in the U.S. with COVID, is there is some social unrest beginning to build. So you could have all the gold and silver you want, and if someone comes at you that's armed, you can't throw a Krugerrand at them, hit them in the head, and think that's going to stop them. So with all this social unrest, do you recommend that people seek out certain havens where it won't be, where they could watch it on TV instead of being in the middle of it, Erkin?
Sure, that's another part and very important part of the issue, the problem.
Where would be a couple of good locations?
I would not have. I made a video on this on my YouTube channel,
Okay.
and I discussed the two approaches. What was the English name? Dug in or dug out? Something like that. Bug in or bug out?
Oh, bug out. Yeah,
bug out. Yeah.
Yeah.
Would you prefer to stay in your location, in your house, or would you prefer to go out with all these equipment and etc.? And in Turkey, people are considering to go back to their villages because it's still vivid here. They have got relatives in rural areas.
Okay.
And
Get out of urban areas like Ankara. Okay.
Not actually. Ankara is a big city in Turkey. For example, every city has got rural areas, even Istanbul. And now I said in that video that it doesn't matter if you bug in or bug out. The important thing is you need a network of trustworthy people around you, because you cannot survive alone. Forget about that. If you have relatives in the rural area and if you are good with them, go and visit them.
Even mother-in-laws?
I don't know. If you are good with them, why not? I was very good with my mother-in-law when I was married.
All right. I'm just kidding.
Ago.
All you mother-in-laws out there. I don't want to have a million emails. Mother-in-laws are, looking after their children's interests. So, it was eye-opening here, Erkan. Do you have any kind of, I know a lot of people think that what's happening in the U.S., all the liquidity that the Fed is pumping into the economy, that this isn't as much about liquidity as it is about solvency.
Sure.
And liquidity cannot solve a solvency issue. Do you agree with that?
Definitely 100%.
All right.
Before the COVID-19, because of this huge credit bubble, let me
zombie companies.
Again. Yes, definitely. There was some, maybe according to the BIS numbers, 12% globally, and with some calculations, 20% in the US. There were zombie companies already. So when this COVID-19 thing hit the globe, now they are in a much worse position. And even very famous companies were already zombie companies, like Tesla, like Netflix, and this will turn into a solvency issue. You are very right, and we will see it when the second wave hits, or even the second COVID-19 wave wouldn't hit. We need to see if the Federal Reserve printed enough money to cover the dark hole created in the economy.
Okay, we have a Fed meeting this week, and I know you told me you had some other interviews today. Why don't we wrap it with what do you think the Fed's going to say this week? Everything's great. Everything's okay.
I think they will say, "Don't worry." First of all.
Yes. Okay.
They will not change the rates. Of course, they will say that there will be no negative rates in the United States, but they will also say that we will do whatever. Needed if other dangers emerge.
Okay, well, I want to thank you, Erkan. Anyone who goes through an interview with me becomes my trading warrior brother. So,
thank you very much.
You survived it, and there were a lot of eye-opening things. I'd like to have you back sometime in the fall, so we could see what's happening. And I really appreciate you coming today and fielding questions and edifying the FACE community. Thank you, Erkan.
Thank you very much. It was a great pleasure.
All right, I had a good time. We had a few laughs, so good combination of compelling information and fun, right?
Yeah, thank you very much.
Okay, buddy. So everyone, you could follow Erkan. Do you have other places? You mentioned your YouTube channel.
Yeah, you can.
Okay, I have to ask you one more thing.
Sure.
What is the Wizard of Oz?
Normally it's Wizard of Oz,
right?
Of course, I think I forgot it why I did that because it's a sub Twitter account for me. It's a backup Twitter account. My real Twitter account is dash Erkan Oz at dash Erkan Oz.
Oh,
And
okay. Because I found you on this one.
yeah.
Okay.
Sorry.
Well, are those the two places people could find you? And
yeah, I'm mostly active on Twitter and YouTube. And if you type my name on YouTube, Erkan Öz, you will definitely find me.
okay.
And of course in Twitter as well.
Okay. So as a resource for what may lie ahead, and congratulations on writing in 2013
Thank
that
you very much.
2020 was going to be a key pivotal year. Appreciate
very
you being
much.
with us again, Erkan. Good
Thank you
hunting,
very
buddy.
much.
And
You
may you
too.
and your loved ones remain untouched.
Of course, yeah, and same
Inshallah.
feelings for you. Oh, great.
Inshallah,
Thank
buddy.
you very much.
All right,
Thank you
brother.
very much. Bye.
Take it easy. Bye-bye. All right, so that's a wrap, everyone. Hope you enjoyed listening to Erkan. And don't tell me that worrying doesn't work, because almost everything I worry about doesn't happen. And don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios. You're very welcome, everyone.